Tuesday, May 14th, market analysis, Stan Ehrlich. You guys know you can always reach me at info@ersignals.com. And tomorrow, Wednesday, the 15th, sorry to say I will not be able to do my YouTube, but I'll pick it up on Thursday and Friday and keep on going after that. So I start out with the stock market indexes and go to futures. And today we're going to do a little bit of a mix with NinjaTrader and TradeStation. So what have we got? We've got the E-mini trying to make a higher high than Friday and Monday, which were very rarely the exact same high 2 days in a row. The lows were also extremely close, and in fact, the closing prices were very close. So Monday, we pretty much duplicated Friday's price action, meaning the market's stalling out. That does not necessarily mean it's going to go up or down. Let's see what happens next. Now, my opinion is because it's very, very close to being overbought, and we did get overbought in some of the indexes, I think we're about to start to slip. But I've been saying that for a while, and it hasn't really caught on. But I think I cannot abandon that expectation. The first level on the downside for it to hold, and it would be a very minor one, and it could go right through it like a hot knife through butter, would be 51.91 for the June E-mini. So I really don't think that's going to stop a decline. Next, maybe, depending upon how far and how fast and how long it's going to take, 51.26. But I think a much more likely proposition is going to be in the 50.24 to 5,000 price range. Now, for the last several weeks, month or two, I have been expecting, and I certainly cannot rule out 4,900. 4,900 down to 4,800 broad zone. That's the most bearish I can justify before the next major rally to new historical highs. But right now, I'm not quite sure about which one of these support areas is likely to stop the break. We're going to go from the E-mini daily to the 1 minute, and you can see we've been dribbling back down toward a low that was made this morning, California time at 7:38. And then we had at the 5:30 California time, an hour before the normal stock market opens, etc., some bad news, but it took it in stride and came all the way back to new highs. Where are we now? Just about the same levels before the news came out. So it's in the market. What happens next? And you already heard me say, I think it's going to go down some more. Spider. Lower than where it opened, near the low of the day, officially overbought last Friday, Monday, and today in my custom RSI interpretation. Ready for a bearish engulfing ER sell signal, but today we're not higher than yesterday. So we can't have, so far, a bearish engulfing, unless, of course, it pops up higher than yesterday and then goes back down to a new low, which does not seem particularly likely. So maybe it'll just start to slip. Next, Spider, about 5-minute chart. Poking away at support, the low of the day, and you saw that on the daily a moment ago. The important part is the rallies couldn't make it above Monday's high, which did on Monday make it a tiny bit above Friday, essentially the same. So the real key here is starting to trade below 1960, and then we've got new lows for a couple of days. Next chart, Qs. We do have a new high for the move up, but unfortunately, we do not have an overbought condition, so I won't get a sell signal. Now, the price range we're at for the last 2 or 3 days is right in the same neighborhood where starting in March 1st, we ended up topping out, then topping out, then topping out, and topping out just a little bit higher than today, yesterday, and Friday. So there is a chance it could move up a little bit more, but this general area has obviously caused problems in the past and looks to me, because we're very close to overbought, also to be causing another problem. There's an old gap that was filled, don't need that anymore. So my expectation is to come down to 413 and maybe to 394-ish for the QQQs, which now we're looking at the 5-minute chart, and it certainly does not look like it's starting to slip very much yet. NASDAQ futures, again, almost overbought, not quite. We do have an outside trading range day in the June NQ, NASDAQ futures. If we get lower on the day, we'll have a bearish engulfing, but no sell signal because it's not overbought. But again, we're in a price range at a resistance level where it's caused problems going back into February and March and April. Could happen again. Looks like it may. Same symbol, NASDAQ June futures, 5-minute chart. A lot of wobbling back and forth without much net change. We got the Russell. We have an outside trading range with a higher current quote at the moment, but again, resistance area, problems every time we got up here, ever since, in fact, last December. And then it surfaced again February, March, April, late March and early April. And now we're there again. I think it's about to turn down. Next, the Russell, 1 minute, and it's kind of coming down fairly nicely at the moment, but quite a ways to go to get down to today's low, which again was 5:30 California time. Some information came out. Not important to me what information, it's how the market reacts to the information, not necessarily what it was. Next, we've got the YM with an official sell signal yesterday. This is an ER sell signal point blank. Outside down day or a bearish engulfing and overbought last Thursday and Friday. Monday, we got the signal yesterday, and today we're down a little bit. This signal might be the one to be cognizant of, and it will help everything else work lower also. So I like that very much. Here is on the 1 minute chart, our ER1 scalp, which lost a little bit of money. We got short near the low, unfortunately, a bear trap yesterday, and by the close, it did not get stopped out, and there's our trailing stop, but it did get out on the close it's supposed to. It's a scalping trade, and it lost very little, small amount. The ER1 overnight is still in the trade. I haven't changed my kicker so that the stop moves down faster. I could do that if I wanted. But right now, it's a very, very small loss, and the trade is an open trade. It looks like that line is going to turn from red to green, meaning profitable, on just a little bit lower, few more ticks. Okay, bonds. We got the bond market outside trading range with a higher close at the moment. Nowhere near overbought or oversold. All this does is apparently say it's going to go up a little bit more, and we could test the top of the channel and then turn down, and that would be along with the stock indexes. The notes look very similar. June futures contract at the moment, outside up day, bullish candlestick. It may flip-flop so that it's lower on the day for a bearish before the close, but that does not look particularly likely at the moment. It's hanging in there pretty good near its highs. What about crude? Now here's where I'm going to flip over to TradeStation because we're having some problems with the data feed, and I'll pop up the crude June futures contract in TradeStation. You know that we did get a buy signal on May 8th. So far, the bottom of the break. Oversold for a few days before that, and then bingo. Moved up for a day and a half, and we slipped back down, which is not really a problem, because remember, if I want to go long around the middle of the signal day, the green dots, we have to dip back down a little retracement, approximately 50% of the signal day. So it did it. And now we're still sitting there. So all I have now is the expectation of higher levels. Don't want to see any lower lows. Certainly don't want to see it hit the green yellow dot. That's our fail-safe sell stop, but the code is not running. So I can tell you that ER3 probably has the same stop to start with. And ER1 scalp certainly probably had a very small loss on May 8th. And ER1 overnight is probably a loss at the moment, but it's still probably open. But this is doing nothing out of the realm of normal. All I need now is more strength. We are going to go to natural gas. No, I'm going to rotate in the wrong directions here. Let me please go to natural gas. Here we go. Next, new high. We had a buy signal in the middle of this trading range, which developed an excellent support level that held several times. When we got down to 1.9, give or take a little, now we've been overbought for a couple, 3 days. Today's the 4th day. And we poked right up against a little resistance level, which is the previous high that was made on May 5th, and some lows and tops that were earlier than that. So this is a reasonably good, not the super great ones, but we're overbought also. So I got no problem in expecting a little bit of a minor dip here. The next chart, I'm going to just do this manually instead of in sequence. Heating oil and new lows for heating oil. We had a couple of buy signals. Now, just because you got 2 of them back to back does not guarantee they're going to work, and this one didn't. Actually, it did for 1 day. We're still oversold. Signals didn't really work, basically. New low for the trend. Probably not going to go down too much. And we're close to some very important previous lows back in December and early January. Maybe it'll dip down a little bit more to about 2.377. But at any point, it could start to rally for several days, a week or two. The question is this going to continue a longer-term bear trend? All I can say at the moment is we're supposed to rally for a little bit, minor rally. Next, natural gas. It keeps going to the wrong one, so I'm not set up on heating. We're going to go with heating oil, and I just talked about that. Gold, TradeStation Gold, the June futures contract. Sideways trading range basically for the last month and a half. Doesn't seem to want to follow through to the upside. We're not following through to the downside. We're developing maybe a pennant or a trading range or some sort of formation. So I really don't have a lot to say here. We got very close to overbought, but not quite, and dribbled back just yesterday a slight bit. Nah, I haven't got it. What about silver? Let's go to the silver chart, and that's going to be right here. Good. Same thing for silver. The rally was a little bit more extensive, got overbought Friday, pulled back Monday, a little rally today, but no new highs. I think it's going to dip back down a little, but I really don't have a very strong opinion at the moment in silver, sorry to say. So I'm going to go to platinum, and right here, we've got a whopper of a rally today and into fairly significant overbought conditions. We got as high as 83. Now, we did blow right through a resistance level, a previous high we made way back on December 28th. And that's for the specific July platinum futures contract. This looks kind of bullish. If we maintain this close above the previous highest high on December 28th, even if it's overbought, we're probably going to get another day or two more strength. Best I can say in platinum. I wouldn't be a buyer here because of the overbought condition. Copper. And here we go with copper. So, whopper of a rally in copper, new high ground again for quite a while. A recent sell signal on April 30th worked for 2 or 3 days, not much. And then we're out. New highs, almost very, very close to overbought again, but I'm looking for higher levels. Then another technical correction. And this is copper. So we should be going to grains. And now I'm going to flip back to Ninja again. This is kind of fun going back and forth. Where are we? Right there. Come on, grab it. Good. Here we go. And skipping. Soybeans. We bought the bottom of the market. Green, bullish engulfing ER buy signal in soybeans. In fact, 4 out of 5 of the grains, bean, oil, meal, corn, wheat. We got 4 buy signals at the bottom out of 5 of those markets. We're only missing soybean oil, the next chart. This is doing great. We've slipped back after getting overbought a few days ago, last week, and coming back to some support. I think we're about to make new highs for the move very soon. My minimum upside objective on this apparent double bottom formation is about 1340. That would be for July beans. Nothing wrong here. Double bottom, second low, buy signal, great. Next chart. Soybean oil. This is trying to form and not doing a very good job of a very, very big bottom formation. And I keep complaining this head and shoulder looks like 2 things are wrong. It's huge. You usually don't see it 2 years in the making. Usually a month or 3 or 4, maybe 6. That's small to medium, up to maybe a year, which would be on the large size. But doubling a year to 2 years, this started developing July of 22. That's awful big. I'm skeptical. Plus the fact that it's not the bottom of a longer term bear move. It's after a big sideways trading range after an up move. That's not usually where they develop, but it's developing. So going back to the nearby chart here, we are trying to hold this little double bottom, which is the last shoulder low. And today we're coming down pretty hard and fast, 187 ticks. So we have to hold here or it's really going to start to do some damage to this bottom formation. Next chart is soybean meal. No problem. We bought the bottom of the market on February 29th. It went roaring last week in a new high ground, overbought, technical correction, no problem. I expect soon it's going to start to rally back up again. I'm good with that. Next, corn. We bought the bottom on February 26th. New high. Looks like yesterday and maybe tying the same price today, if not a tick or two new high. Up move in progress. Minor problem is we just got overbought a few days ago, and we probably should have a little bit more of a correction, but there was one correction already. It bottomed out after 2 days down on Thursday of last week. That's when I did the money show in San Francisco. And then it came back up again. We might just see new highs by a minor amount, but it's going to get overbought again. Bull markets get overbought relatively frequently. They back up a little bit and they march back into new high ground, maybe getting overbought again. My first major problem is at 500, up to about 515. That's the beginning of significant resistance. So far, a minor little resistance level, and I'll draw it in for you right here. From that little high over to here, we bumped right into it. Yeah, it could dribble back very slightly, maybe not. I'm friendly. I like it. We bought the bottom of the market. That's the important part. And what about wheat? Bingo. We got 2 buy signals at the bottom of the wheat market, March 8th, March 11th. Retracement didn't make any lower lows. Sideways for a while and took off like crazy. Now overbought a third time with a third new high. I just mentioned bull markets get overbought, pull back a little, get overbought, pull back a little. Now it's overbought again, so it's starting to pull back a little. I can't help it. All the resistance levels have been broken. I have to look for 800 plus on the upside, which is a huge move. Okay, what about cattle? Up to date, rally, very good. Starting to look a little bit more friendly. If we can break some of these recent highs, we'll probably get up to 180, 181 and a half maybe. Friendly on cattle at this point, finally got an opinion. Hogs, head and shoulder top. We sold the high of the market, ER, sell signal on the very high day. Shoulder is not very well developed on the left, a little higher than you might expect on the average on the right. But the important part is when you do the neckline, there's the neckline. It got broken on a closing basis with a big down move, and we're going down since. Yesterday, it made a new low for the move down. We've been oversold for several days. We deserve a bounce. The market can't bounce very much. I think this thing can make another set of new lows very soon. Minimum downside objective in hogs, and this is the June contract, 92.77. Next chart. I'm going to go to TradeStation one more time here. And in the unleaded gas, let me find that real quick. Sorry about this delay. And I actually don't think I've got it in TradeStation. So I'm going to pass on New York RBOB unleaded for today. OJ, boy, this is the new the new French wine. This stuff is just skyrocketing. Back when it topped out October, November, there was something called, I think it was the green tree disease or something like that. I don't remember. And it looked like they had it under control because the market went down quite a bit for a month or two. But we have a buy signal at the bottom, or almost exactly on the bottom, rallied up to a sell signal and it went flat until finally it broke out to the upside last week and roared into new high ground. Now we are overbought substantially and there is a gap to close. Any day now, I'm looking for the beginning of a move to 383 on the downside. But that's a lot of support. It probably will hold there and go back up and make new highs again. I love oranges, and I hate to say that. It's just getting really expensive. Next, we got the soybeans, so I'm going to go back to, cocoa. And here it is. Challenging lows, dropped like a rock yesterday. Buy signal only worked for a couple of days, or one day really, but there was some money in it. And then we're flat because it got bumped out on the way down probably yesterday. Today, it's trying to make a little bit of a double bottom here. That's something to watch for. Oversold on the first break, not quite so much so on the second one here. This is going to be interesting. This could create a little double bottom. If that's true and it worked, then the upside objective would be very close to the previous tops here. All right, that was cocoa. Coffee. Same situation, except we are at, and we were last week at, a support area. I should probably put a line in here real quick. Sorry, I'm not working with TradeStation quite that much anymore. Drawing horizontal, where am I? Right there. And right here is where that line should be. Too high, sorry. Right there. Top, 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 bottom, bottom. Back over here, very close to some highs. I like that line. Hit support. Maybe a bullish engulfing today if it can get strong enough, quick enough. That'll be a minor double bottom. Very small. Something to watch. And real quick here, sugar, the sweet, coming up. Now we've got a new low for the move and a breakout to the downside yesterday. Large head and shoulder top, very big. It started forming with a bearish engulfing at the first high of the first shoulder back on May of 23. That is a year ago plus. Had another little minor high, slightly higher, June of 23. Both of those high constitute the creation of the first shoulder, a little bit of double top slanted upwards. A break for the pivot point. Then we go all the way up to a rounding top, if you will, and that's the head of the formation. Now, to create the last shoulder, which usually looks similar to the first shoulder, we did it again. We've got a little bit of a double top, in this case slanted downward slightly, making for a very symmetrical looking situation overall, including a nice little low between the two highs on both of the shoulders. Yesterday is the key to this whole thing, and I haven't got an objective drawn in here for you guys, so I'm going to draw that in real quick. Let's just duplicate this line real quick. Drag the beginning of this new line to about the average of the two highs. I'll do it that way. So I'm going to average this and a pivot point to the lowest low between the two highs and kill the extension. And that's it. That's the depth of the formation. Drag that line to the breakout point to yesterday. And there it is right there. And my minimum downside objective is 13.5. Pretty big from 18.5. That's it for sugar. We'll see in the next 2 to 4 months how that runs, how it acts. Oh, by the way, in sugar, today's high is smack dab up against the neckline, which of course is just great. And I have to go on to my last chart here. So I am going to go to the cotton chart, the last of my group, and show you a new low for the trend. New low for cotton, bearish. Buy signal worked a little bit, looking for a lot lower levels, probably down to 60. And that's it for today. Thank you, ladies and gentlemen. Stan Ehrlich, Market Analysis, signing off.